Good evening, everyone. Welcome to another session of Decode with Nitin. Today's Indian market was a picture of cautious optimism. The Sensex ended almost flat, adding just 9 points to close at 83,442, while Nifty inched ahead by just 0.3 to finish at 25,461. On the flip side, Bank Nifty slipped slightly, ending down by roughly 83 points around 56,949, giving the sector a subtle nod of caution.
Exactly, and you could almost hear the markets whisper, "We'll rally, but only if global cues behave." We saw consumer names like Godrej, consumer products, surge about 5% after reporting double-digit revenue growth, helping FMCG shine even as broader sectors paused. Meanwhile, IT and financials took a hit. Tech Mahindra, Bharat Electronics, ONGC, and Ultratech all slid, cushioning any big upside.
Volume-wise, PC Jeweler caught eyes, with a staggering 33% rally over just 2 sessions, powered by a robust quarterly update. Dabur rose nearly 3% post its business update. Suzlon Energy also ticked up after its merger clearance, and JP Power jumped on fresh Adani bid buzz. These were the stories of the day.
PC Jeweler was like that ahead-of-its-time friend. Everyone said it would bubble, and boy did it pop. In a good way.
Tech M, Wipro, Paysil, these underperformed, all giving back roughly 1%, as investors stayed cautious ahead of the U.S. tariff deadline on July 9th. The rupee weakened about 0.5% to around 86 per dollar. With global uncertainty swirling, domestic caution was understandable.
Tariffs, rupee blues, select sector strength. Today's session had a bit of everything. Chart-wise, Nifty essentially traded between 25,400 and 25,600. While Bank Nifty was contained between 56,800 and 57,100. Technical analysts flagged support around 25,400 and resistance near 25,600 for Nifty, a flat to slightly bullish bias. Bank Nifty needs to hold above 56,300 to aim back toward 56,900 or 57,500 levels.
So what's cooking for tomorrow? Expect a slow start. Global cues will again be key. Earnings from Q1 and any tariff resolution by U.S. President Trump before August 1st could catalyze moves. Watch for continued strength in consumer staples and oil gas, while financials and IT could stagnate unless macro triggers arrive.
Now, a special spotlight on our watch list names. Hindustan Unilever, PC Jeweler, Suzlon, Tata Consumer Products, Nestle, Kotak Mahindra, Godrej Consumer, Reliance, Trent, Adani Ports. Let's keep it crisp. HUL jumped around 3%. Momentum remains healthy, so next session could see it head toward a target near 36,000 with a stop around 34,200. Tata Consumer and Nestle both defied the broader market. Expect continuation to daily highs around 725 for Tata and 248 for Nestle, with tight stops near key moving averages.
Suzlon, post-merger clearance, bulls are circling the 50 mark. Keep a stop loss near 48, targeting 55. Meanwhile, PC Jeweler's momentum is vivid. Look for fresh entry near 22, aiming 25, stop at 2020. But yes, it's volatile, so trade size accordingly.
Trent, not so fast. It tumbled heavily earlier. At current levels, cautious approach only. No option play till trend stabilizes.
Now, option analytics. Zeroed in on Trent July 5700 PE. With the stock down nearly 35% from peak, implied volatility is rich. The contract is deep in the money, yet theta decay is steep with just days to expiry. Open interest has spiked, suggesting big institutional hedging. Spot is well below 5700. Intrinsic value high, extrinsic low. Greeks show delta near minus 80%. Gamma steady, theta bleeding. Our read, minimal upside, but risky. Unless you see a sharp bounce, avoid fresh longs there.
Institutional buying? We saw steady fund inflows into Kotak Mahindra and Reliance over the past 7 sessions. Promoters have nudged up stakes in Suzlon and Godrej Consumer. That's a positive signal, supporting our structural bias in those names.
So here's our game plan summary. Expect Nifty to trade flat with range defined tomorrow, Bank Nifty holding near support, then rallying if global cues soften. Watch consumer and selective infra names. Go long on HUL, Tata Consumer, Nestle, Reliance with defined stops. Avoid Trent PE unless a technical bounce confirms. And keep an eye on PC Jeweler and Suzlon for short-term plays.
Can we do a deep dive on Trent July 5700 PE?
Of course! Time to dissect the heavy drama in Trent's option languishing near the bottom. The July 5700 put ended today at around rupees 334 and 50 paisa. It opened at rupees 201.75, trading between rupees 161 and rupees 381.
That's a chunky swing. Spot price for Trent futures is about rupees 5,504 to rupees 5,535.
Open interest for that PE stands at 251,700 contracts, up a solid 102,600 from last session. Volume was around 2,513,000 contracts.
So let's break down the Greek cocktail. Delta is deep negative, likely around minus 80%. Gamma's moderate, but theta decay brutal with just weeks left. Implied volatility is rich. Traders are paying up to hedge downside, but extrinsic time value is melting fast. Intrinsic is spot minus strike, zero-ish because spot is below strike. Extrinsic is essentially the entire premium.
Open interest build plus volume suggests serious institutional hedging. Maybe funds insurance for long positions, but could also signal organizers laying bearish bets.
Our read? This option is deep ITM, rich in extrinsic value, but with theta bleeding and spot sitting well under strike. Upside in premium is limited. Unless we see a technical surge above 5,700 in Trent, long positions here risk decay.
So our recommendation? Steer clear of fresh longs on that PE. Wait for spot to reclaim closer to 5,700, volatility to settle, then reassess. If you're daring, a very tight swing of 20 to 50 rupees might be possible, but only for nimble traders.
All said, markets were flirting with direction today, but remained range-bound. The spotlight shifts to tomorrow, tariff headlines, global cues, and whether the Bombay bull returns. We'll be live again, breakfast brew in hand.
Until then, trade with discipline, respect your stops, and enjoy a good night's sleep. Cheers.
Now the important disclaimer. All content presented in this discussion is strictly for educational and informational purposes only. The views expressed here are based on publicly available information, verified data, and standard analytical methods, but they do not constitute investment advice or a recommendation to buy, sell, or hold any securities. Stock markets are subject to risks and uncertainties, and past performance is not indicative of future results. Listeners and readers are advised to consult with their own SEBI-registered financial advisor before making any investment or trading decisions. The creators, hosts, and contributors of this commentary are not responsible for any direct or indirect loss incurred as a result of relying solely on the information provided here. Trade responsibly and at your own risk.
If you enjoyed today's deep dive into the markets and want more such intelligent, data-driven, yet relatable conversations every trading day, don't forget to subscribe to our channel.
And hey, hit that bell icon so you never miss an update. We promise to bring you not just the numbers, but the stories and strategies behind them, with a touch of humor to keep things lively.
So stay tuned, stay invested, and let's decode the markets together. Subscribe now, because smart money listens here.
And always consult to your SEBI-registered financial advisor before any investments.